Being told that TVS should also be reporting numbers anytime now. For TVS, actually, we have some expectations lined up, and of course, the stock post Q4 has seen an accelerated fall. So let's see what they end up doing. The expectation is that the bottom line should see a 31% growth to about 170 odd crores. Earnings are expected to be strong. Primarily owing to the base effect, and at 146 crores, actually it falls way short of our expectations. The profit number 4153 on the top line is also a good 120 odd crores below our expectations. While it was expected to be a strong quarter, I think the street is not going to like these numbers. So 146 crores on the bottom line, which should roughly be a growth of what about 15-20 odd percent. And on the top line, the growth should just be about 20 odd percent. So either way, I think it's not going down well, and the stock now down about 1%.
Absolutely, Sumaira. Just trying to calculate the EBITDA as well, and out there it looks like it's a number of close to around 306 crores. So the EBITDA that the company has posted is about 306 crores, and if we just take a look at it from the revenue perspective, the EBITDA margins have come in around that 7.36% mark. Sonia this morning, I remember, was telling us that 8% would be an important mark to watch out for. 7-8 is the range that we will be working with, but 306 crores in terms of EBITDA would mean that it's a 7.36% margin. Sonia is with us. Sonia, what do you make of these numbers? 147 crores on the bottom line. The top line has come in around that 4,153.7 crores, and the margins seem like they've come in at around that 7.3% mark.
Okay, so this is just a top-line growth of only 10.9% that they've seen. 4153 crores compares to 3742. Okay, we have to adjust the excise duty, yeah. So 3742, you adjust the 343 crore number. EBITDA margins are absolutely in line. So 7.4%, I think, is what they've clocked in this time, yeah.
And the revenue growth adjusted is 22% odd.
22%, all right. So that's absolutely in line. I mean, revenue growth of 22% is what the street was estimating. EBITDA margins of 7.4%. There's no surprise either way, actually. Right. Even on the bottom line, I think the number has been hit by a higher... There's a little bit of an uptick as far as the tax expense is concerned. So that, I think, has hit... The tax expenses have gone up to 66 crores versus 49.9 crores same time last year and 26 crores last quarter. So higher tax expenses have, is one of the reasons why the bottom line is below expectations. But on the operational front, no surprises at all. Largely in line with expectations.
Realizations have come in at 44,739 rupees per piece, if that helps.
44,700.
44,740 odd.
Okay, so 44,900 was the expectation as far as realizations are concerned. 44,700 would mean it's a 4% year-on-year jump that we're seeing in realizations. They did take some price hikes, so they could pass on the higher raw material cost to their consumers. Also, the product mix has improved for them. Higher amount of motorcycles, higher three-wheelers in sales, because of which realizations have gone up a tad bit. But these numbers actually look decent, in line with expectations. There's no negative surprise this time around. I think that's something that the street will like, because this 7.4% margin compares to 7% last quarter and 7.8% in the quarter before. So for 3 quarters now, they've been in this range of around 7 to 8 odd percent. If they had done 8% levels, that would be a big positive surprise. But 7.4% is largely in line with street estimates, and realizations as well, a tad below. You could complain a tad bit, but as I said, there's no real surprise either way in TVS Motors numbers.
Seems like the lower realizations, Sonia, the company has managed to hold on to its EBITDA by lowering its other expenses as a percentage of sales. So other expenses have come in at the same 443 crores. This compares with a revenue growth of almost 22%. So other expense as a percentage of sales has come down to around 10.7%, which compares with about 13%. So that may perhaps explain the sort of protection that the company has had on the EBITDA despite lower realizations.
Yes, that could be actually. I was just going through the press release as well. They say that PBT for Q1 has come in at 212 crores versus 179 crores, which in same time last year, which included a notional fair valuation gain of 36 crores and a one-time GST discount. Remember, we were talking about that, of 16.5 crores that were given to dealers. Hence, the PBT growth is 33% compared to last year's Q1 operating PBT of 159 odd crores. So, yes, these look like a decent set of numbers actually. 7.4% margins margins not bad at a time when the raw material cost pressures have gone up for the industry on the whole. Ashwin Patil is here with us. Ashwin, how would you react to this 7.4% EBITDA margin number for this quarter? And overall, how are you positioned on the stock, considering it's fallen quite a bit? I mean, it's down 35% in 2018. You think there's a bit of a legroom on the upside now?
See, the results as far as the EBITDA margins are concerned, that 7.4%, I think the company has just moved from one page to the next one, because expectations, had they done something close to about 8%, then we would have gone a bit positive on it. But just at about 7.4%, they have not actually beaten the street expectations, or they have not underperformed them either. But it's just kind of maintaining status quo. What it was there in the last quarter, they have just continued with the same thing. So despite a good volume number in the volume growth in this quarter, the realizations have gone down. So the mopeds segment, which has been always quite strong, have been quite good in this quarter as well. About 30% of the volumes are coming from that particular segment, and that is a low margin business. So unless and until that contribution goes down, going forward also, we are not expecting anything great on the margin front. The 10% mark, which the management had said they would be coming up by the end of FY 19, or maybe in this year, it looks a bit elusive as far as the margins are concerned, because the moped contribution is still higher. And secondly, on the marketing expenses and the other expenses side, if you compare them with the likes of Bajaj and Hero, it's quite high. So the comparison, why the margins are not coming in at a great mark, it's the reason. These two reasons are the main factors which are driving lower margins.
And
so,
there are some more margin pressures, right, going ahead, whether it's higher raw material costs. It's hard to pass it on at a time when there's so much competitive pressure. There is an impending price war as well. I mean, some of the lower cost products prices are being cut by the likes of Bajaj Auto, etc. You think in this entire scenario, will they be able to even hold on to this 7.4%, or do you see a declining trend in the quarters to come?
Exactly. The other expenses to sales in this quarter was lower, and that was one of the reasons why they have maintained their margins. But going forward, with the likes of Bajaj Auto, concentrating more on the lower or the mass segment, and that may, that's showing a possibility of a price war getting triggered henceforth. These companies, the two-wheelers will be, the others also will, I mean, the TVS, the likes of TVS, Honda and Hero, Hero may be saying that they are not going to take any price cuts, but still they may be forced to do that in the coming future, because the price war is inevitable, I think, in the two-wheeler space. I mean, such a scenario where also the RM prices are, quite getting firmed up. I think that these margins, 7.4% was still better margin in this quarter. Going forward, I think I won't be surprised if margins come somewhere in 6.5 to 7% range again, rather than going in the upward direction.
Okay.
Right. Ashwin, before we let you go, the stock is down 30% from the start of this year, has underperformed the others, and you say that these results not bad but not good either. So what does one do with the stock?
See, we are not positive on the stock. We have been liking the likes of Bajaj and Hero, and TVS actually is very overvalued as well. And with expectations of lower margins here on, we are not maintaining. I mean, we are not having a positive view on the stock.
Okay, well, even the realizations, at 44,744 rupees a unit, it's actually a fall of around 0.3% on a quarter-on-quarter basis. So, that's something, I guess, that would not go down very well with the street. But these numbers have no surprises either way. It's just, the same story carrying on for TVS Motor. They've managed to hold on to margins of 7.4% versus expectations of 7.5%. The other expenses to sales has been lower for them, and that's why they've managed to sort of maintain their margins. Realizations have fallen a tad bit, revenue growth largely in line with expectations. So no surprises either way.
All right.